difficulties. It seems like everybody being home right now is just lagging. It's just sucking up all the internet bandwidth, and we can't even get connections going. So if this is looking a little bit pixelated, a little bit weird, sorry about the inconvenience, but try to hang in there with us. We're really trying to make it through here. So anyways, once again, I would first want to start off by saying thank you to all the first responders, all the essential workers out there that are still making it happen for us in today's crisis. Please continue the great work, and let's hope that this is over really, really, really soon. But anyways, once again, I'd like to welcome Pablo. Pablo is my CEO from Equity Smart Mortgage Home Loans, and he's been in the business for a little over 20 years. Am I correct, Pablo?
Yeah, it's been I've been in the game since 1998 now. So whatever, I think 21 years. So I've been through a lot. And first of all, I want to thank you for having me. And I'll try to see if I can help out with as much information as I have. I've been getting a lot of information on lending, and I'm more than happy to share with you guys. So I'm happy to be here. Thank you.
And I appreciate that. I mean, I think that with everything that's happening today, I'm sure that you're seeing a lot of stuff happening in the lending world as well. Now, I mean, we hear all these, man, there's so many crazy things being said out there right now that it's just insane. But how has what happens with the quarantine and COVID-19, how has all of this actually affected your business today?
Well, in good part, my company has been, when I first started building my company, I built it on a remote basis. So a lot of the loan officers were already working remote. So on that side of things, it's been great because it's been easy because we already set up, the whole foundation is set up so that people can work remotely. The big challenge for myself was my staff, trying to get all my staff working from home. The people that, I come into the office every day, the people in the back office that make everything happen, that make everything in Equity Smart work. Other than that, the big changes with the big lenders have been that they have to started working remotely from, they have big locations, like for example, United Wholesale Mortgage. They have 4,000 employees, and these employees are having to work from home. So I'm sure it's a big challenge for them. And I've been telling all my loan officers just to expect delays right now because not everyone's functioning from an environment where they can work from. So some of the big changes that I've been seeing.
Now I know I've been hearing a lot about they're going to be doing a forbearance mortgages for this whole.
Yeah, Hugo, you're going in and out, but I think you're asking me about
payment. Heard anything on that, or can you give us any kind of an update on that?
You went off a little bit, so I'm assuming you're asking me about forbearance, correct?
Yes. Can you hear me now? I mean, what it was just asking, what have you heard anything on that?
Nothing more than what they're talking about in terms of what the government's putting out there, but it sounds like a lot of lenders are going to be open to forbearance. And keep in mind that April 1st is going to be the first mortgage payment that happens that's going to occur after this whole quarantine. So everyone's made their March payments. So it's something that's unfolding right before our own eyes. Earlier, I did a post on this whole thing about forbearance and everyone having to make their payment, how it's going to affect the economy. So make sure you check out that post. But we got to see how this is going to unfold because the lenders are probably on the sideline waiting to see how many people are going to ask for forbearance and how huge this is going to be. We're all on standby right now. So, payments are due. Right now we're on March 27th. Payments due are April 1st. You're delinquent after April 15th. So that's why I gave it a 2-week timeline because there's a grace period before you have to actually make your mortgage payment. So we're going to see this unfold. We're going to see how lenders behave. We're going to probably get the information from our consumers that are asking for forbearance, what they're allowing and what they're granting. And I'm sure that the lenders are putting things in place so that they can accommodate folks that are going to need to go into forbearance.
Yeah. I mean, do you see that's great info. Do you see a lot of people going, or the banks doing any of the short sales again, REOs, basically going to say, screw it, we're not going to do it, we're just going to foreclose?
I don't think so. I think because of the government pressure, and this is something new to us, to humanity. This whole virus is something that we're all experiencing for the very first time. I think there's going to be a lot of compassion and understanding. I'm sure they're going to have guidelines, though. They're not just going to be like, okay, you're on forbearance, you're cool. You know, I'm sure that you're going to have to demonstrate at some level that you are in need of a forbearance. You know, so there's going to be some criteria, maybe showing that you got laid off, or a letter from employment, or I don't know, but I'm sure there's going to be the same thing, some sort of guidelines, the same way there was for short sales or loan modifications back in 2008.
Right, right, right. I mean, I ask you these questions. I mean, these are the kind of things that I'm running into. People are asking, you know, what's going to happen. I mean, is the market going to drop? Are we going to be able to maintain where we're at? We're also, I mean, in the lending world, obviously, are you still seeing new purchase loans, and or are you seeing more of the refinances because of the low interest rates?
Well, the rates haven't dropped a lot, and the post that I put earlier on Facebook today, I broke it down on why the rates haven't dropped, and it has to do with servicing. So the companies that are servicing the loans right now, they're really concerned about people's ability to make payments, right? So,
Hmm.
so normally what happens is that, let's say United Wholesale Mortgage or one of these lenders, they originate the loan, right? So then
Right.
they'll sell it to a servicing company. They'll earn like 1% or 1.5% because there's value in it, you know. From what I understand, the break even period is about 3 years. 3 years for these servicers to start making money.
Wow.
So the two things are hurting the servicers: the quick, the rates dropping too quick, and refinancing. So there's no value because rates are going to drop. Then the servicings, they don't want to pay as much because they're like, we're not going to break even after our third year because these loans are going to be refinanced within a year. So lenders are keeping it artificially up for that reason, and also because the servicers are not paying them the 1 point anymore. They might be paying them, let's say, 0.25 basis points. So,
Uh-huh.
so, so now there's no money that the lender was making off selling it to servicing. So now they got to make it up by increasing the rates, which there's built-in pricing in the rates. So that's why we haven't really seen a really good drop in rates. I mean, right now with the bond market the way it is, rates should be in the twos, like mid twos or somewhere around there. But like I said, it's a hesitation from the lenders. And it's also, it starts with the servicers not having confidence, and also expecting a large, overwhelming amount of people asking for forbearance or some kind of modification. Hope that makes sense.
Totally does. I mean, I try to put you on full screen so that way people can see you a little bit better and hear you better on your phone. I mean, it totally makes sense, and I see how that would work out. But in today's world, I mean, people are people. Everybody's going to be more of the hey, you know what can you do for us today, right? Um, what do you think people should be actually doing today, to be ready for whatever's coming up? Is there anything in particular that they should be doing?
I think if you're able to just continue living life the way you have been, and try to support your local restaurants, try to support your local businesses. I mean, I hate to see them go out of business. So the cool thing is a lot of people are working from home, like a lot of people in the county, a lot of teachers, and they're all getting paid their full salary, So right now we're not all spending money. So, maybe go out in the market, go to the restaurant, spend money wherever you can. I'm not saying if you have the ability to, of course, right? If you don't, then you don't. But again, this is month number 1 that we're going to go into this. April 1st is going to be the first wave of rents and mortgage payments that are due. So I think we can withstand 1 month. My concern would be going over that, and also not try. I've been getting calls from customers asking, am I going to go to skip a payment? And I have to explain to them it's you might be able to skip a payment, but you're going to have to pay it back at some time. There's no freebies here. Lenders are not giving money away. So unless you really need it, I
Right. Then
would pursue it.
let it slide.
Yeah, and again, the economy's running along. I don't want to paint a doomsday picture. There's a lot of people still working, a lot of essential companies. I see the bus line running. I see a lot of people are still working. So it's not like a complete shutdown. And there's a lot of industries that have the capacity and capability of working from home. So all these people are going to be employed as well. So I think if we could withstand this for like a month or two, maybe, I think we're going to be okay. and we don't take advantage of the system or the things that the government's putting out for us. And we can't really depend on them. Like, no one's giving us directions. Within my own business, I'm also a correspondent lender, and I decided to freeze my line because of concerns of being able to sell the loans quick enough where the lender is able to verify the employment and they're able to purchase the loan quickly and not let the loan sit there for 10, 15 days. And during that period, the bar gets laid off and then we're stuck with the loan. So, that's one of my big concerns. And I started that about, a couple of weeks ago, and just because just because of the uncertainty, and me as an individual, as a small company, I'm tightening up, and so I'm little, I'm not, we're not that big. So you could imagine where the direction that these big lenders are going. And I'm already kind of seeing the painting, the writing on the wall. The subprime already got wiped out. We had about 6-7 loans that were already signed. And those for those of you that don't know what subprime is right now, what we consider subprime is anyone that's qualifying using bank statement programs, stated income. The good thing about these programs is a lot of them, you had to put a big down payment. So there was a lot of skin in the game. These weren't like high LTV loans, so they weren't that risky. They were risky only in the sense that the customer could improve their income using traditional forms. They use some kind of alternative, whether it was business bank statements or whatever, right? But that went away. That's all gone. So we had 6-7 loans on the table that were ready to fund. From one minute to another, the lender said, hey, we're not doing these anymore. And these people were left hanging. These loan officers were left hanging. And that's what happened. And now we have this whole thing with FHA where they increased the FICO score requirements. I think it's 640 now. The DTI can now go over 45. So lending's already tightening up, and we haven't even started month 1 of this. So could you imagine? Could you imagine in week 1 or 2 weeks, and they start announcing that all these people are not paying their mortgage payment? It's going to be devastating, to the economy. It's going to create a whirlwind. A downward spiral, I should say, and where one thing is, it's like a domino effect. One thing's going to make one thing worse, and then worse, and then worse, and then it's going to get to a point where lending may be super tight. Only the people that are really well qualified are going to be able to get loans, and that's concerning for all of us because you're a realtor, right? You go and show homes to, so it's going to limit the amount of people that you're going to be able to sell homes to, so.
I think, well, right now, I mean, we're actually not going out and showing any properties. I mean, we were kind of asked to hold up and not go out, just to prevent more spread of the virus. And with that being said, I mean, I know that I've been reading a lot of stuff, and I know that I think it was FHA or one of those guideline lenders was talking about appraisals. So they're talking about appraisals on some properties. They're either being waived or they're just simply being done from outside only. Am I correct on this? Can you do you have anything on that?
Actually, I do. I do have some good news in that front. Now, our company, because we were doing high volume, we were selected by Freddie Mac to do to pilot what's called virtual appraisals. So this is something that we've been doing for like about 6-7 months now. And what virtual appraisals are is it's very simple. The appraiser contacts the borrower. The borrower pulls out their iPhone, their cell phone. Let's see if I can put it here. You pull out your cell phone, right? The appraiser sends the borrower a text with a link, and then now the appraiser has access to the borrower's camera, and the appraiser instructs the borrower to walk around the house in different parts of the house. He's following the instructions of the appraiser, of course, right? Takes about 30-45 minutes, and then once it's done, the appraiser has all the information, all the data that they need from the interior of the home. So that's something that we've been piloting, and I think Freddie Mac might move forward with it full steam ahead. I know that they're going to allow for what's called drive-by appraisals, where the appraiser doesn't have to actually get off of the car; they just drive by the house, and they're able to do the appraisal that way. So. And these things come at a discounted cost. Like, for example, the virtual appraisals, the cost was only $250. So that's saving the money. That's saving that's saving the consumer money. On another front, we're already getting a lot of appraisal waivers. So when you run your file through DU or LP, which is Fannie Mae and Freddie Mac's underwriting engines, it it tells you right there if you can waive the appraisal or not. And those loans are great, and usually happens on refis or big down payment loans, and that's been saving us a lot in terms of having to order appraisals. So that's been really good. So I think the appraisal part, we're going to get past it once everything gets organized with Fannie and Freddie rolling it out. So I think we're going to be fine there.
Wow, yeah, that's really good stuff right there. Really quick, let me ask you another question. Let me throw you a little curveball here. Have you been one of those big online shoppers, or you've been very, very no, I don't do any online?
Yeah, I right now I'm buying all my stuff. I got kind of used to it. I don't really like shopping. I don't like being at stores or stuff like that. So it's more convenient. Like the only thing I was really go to the stores for was shirts or pants or things like that. But I think online shopping is a great way to go right now, especially with what's happening. So I think it's good. And also what I was doing for my office a lot that we got used to is, we got so busy with so many refinances and loans. We're ordering Grubhub. I'd order Grubhub for the office, buy everyone lunch, so no one had to leave. It benefited me because it kept everyone working, but everyone got a free lunch. And those services are great. Postmates, Grubhub, all those. I've been using them for a while, so it's been an easy transition in that sense. The frustrating part, I think, for most of us is just being home. We want to get out, we want to enjoy life. Humans weren't meant to be locked in. We're not meant to be boxed in. We enjoy freedom. And so it's a little difficult, but if we just if we're patient, we'll get through all this, I think.
Yeah. Well, we always say you never know what you got until it's taken away from you, right? And now that basically kind of our big part of our freedom has been taken away, everybody's like going berserk, like, oh dang, what do I do? I don't know what to do. I have kids, they say, I don't know what to do with these kids. They're driving me crazy. That's what the teachers do, right? Now you could appreciate it a little bit more.
Well,
but yeah,
I'll be honest with you. I'm sorry.
Quite the whirlwind, quite the twist. I guess my other question to you would be, like in your line of work, where do you see the market going today, and where do you see it? I guess once this is over, as far as real estate and lending.
Look, I have total faith in American people. I think we're one of the most resilient people in the country, in the world, and we're gonna get through this like we've gotten through everything else. And we just got to come together. And I'm happy for social media, because this is the way we're going to inform ourselves. No one else is giving us information. The government's saying, oh, there's a virus, and that's about it. Like we got to come together as a community and figure out what our game plan is, what our local game plan is, what we're going to do to help our immediate community. And I think through social media and talking and sharing and getting the right information, I think we'll get through all this, and this, coming up with game plans so that we don't get caught off guard and we're just depending on the government, sailing in the wind, waiting for things to happen. We can take control of things. We can take action. Whatever control we have, let's do it. Let's take care of it. Let's take care of our people. So I have confidence. Again, we're going into month one. I'm hoping that, my hope is that by April 30th, let's say we do have to go into 2 months with this thing, that all this is resolved with the corona, and then we can start resuming life again. That's my hope, and that's what I'm expecting to happen. And I think for lending, it's probably going to take a little time for it to come back to where it was at, where we had all these subprime lenders and all that. It's going to be a while. They're not going to just come right back, They're going to, it's going to take a little time.
Let me ask you this. Well, where do you see it? Because as a realtor, and I know you guys are lenders and all, and most of my buyers, okay, when they're buying, they need to have at least 30 days, 60 days, some 2 years of work history. Now, have you seen or heard anything that says, hey, listen, this ends April 30th, but from there, buyers that want to jump right back in where they were, they're not going to have been working for like the last 2 months. Do you think that's going to affect them, or are they going to have to wait another 30 days to 60 days to try to get pre-qualified again and be able to move forward again? Plus, a lot of people are not going to be able to make a lot of credit card payments. I'm hearing a lot of buyers getting car payments deferred. Are these little things that you see that you think might affect the purchase power or refinance power coming up?
Okay, well, right now, I'm going to go off of what I know right now. So FHA conventional allow for extenuating circumstances, like if you have a gap of employment, because I think that's what you're asking, because people are going to have a big gap, from when this coronavirus thing started to when they start working again, right?
Yeah.
So current guidelines allow for gaps of employment to exist, but it has to be an extenuating circumstance. What's an extenuating circumstance? Something that's beyond your control, like a death in the family, accident, things of that nature. So I think this falls under, definitely falls under an extenuating circumstance because it's not in
Right.
your control. So
Right.
I think they're going to want, at least once the person gets back to work, they're going to definitely be heavy on the VOEs. They're going to want at least probably 1 month worth of pay stubs. So you just got to be prepared for all that. But I think they're going to be okay. I think they're going to, if they're going off of current guidelines, there shouldn't be any issues when people get back to work. But then that's another good thing. I mean, we were having record months when this thing started. Like the economy was booming and everything. So it's not like we went into this with a faltering economy. So there's a little strength, and that strength is going to carry over. I'm hoping it will carry us over for the next 2 months, and then
Right.
we could resume from there. So
Right. That's absolutely true. Now, let me have one of our questions here that we have is obviously I wanted to see how you get this question up there so you could see it. This one here is by we got. Let me see if I can get it up there. There you go. By Angel Quinones. How can realtors address such questions from their clients? And I think he asked this question when we were talking about people wondering, what can I do with my purchase right now? What am I doing? My refinance right now?
Hugo, are you there? Hello? Hugo, you there?
But as you guys have seen and heard directly from Pablo, it seems like most of the stuff that's out there is going to be able to get us through all this coronavirus stuff. Let me check back in, see if Pablo's back. Pablo, are you there again? I'm
Yes.
not sure. Let's
Yeah,
see.
I don't know what happened.
Are you there?
Yes.
There you are.
You were, yeah, I'm,
All right, you're
yeah,
back.
you were talking and
I didn't know if it was one of those drive-by appraisals that got you or what happened, but I was like, dang. But thank God we didn't. Prior to that, we had a question from Angel Quinones. I'm not sure if you saw it or heard what I was asking, but he was just basically asking how can realtors address such questions from their clients? How I guess basically he's saying how can realtors address such questions from their clients? I'm assuming, what do we tell our clients, man? Do we tell them you can't buy anymore? How long are you going to have to wait? What do you kind of think there?
okay, well, obviously you wanna assess the customer situation. If they're in an essential business that's gonna keep producing and they're gonna have work, like I'll give you an example. I actually picked up a loan myself personally from a nurse. She's going into escrow and she's not fazed by any of this because she's like, hey, well, I'm in the right industry right now because I'm in nursing. I ain't going anywhere, so I'm buying this house. So you're gonna have a lot of people that they know themselves that they're in an industry that's needed and that they're gonna keep working, and those are the buyers that you're gonna be able to help. And if your buyers have any concerns that they may get laid off or they might not have the ability to make the payments in the near future, then you might want to hold off with them, just so that you don't put them in a bad situation. So I think it's
Right.
the realtor's responsibility, also the lender's responsibility to advise the borrower based on what their future income is going to look like. Don't base it on like, because I know with this there might come opportunities. There's not a lot of buyers out there, so homes that we're getting multiple offers may not have them right now, and you can jump on something. So it might be an opportunity for some people, and some people might just have to wait it out because of job uncertainty. So it just depends on that. I think. Hope that answers that question.
Right. No, that's absolutely true. we had Sonia out here also talking about, one of the quick ways that we can all, I guess, kind of support our local businesses like nail shops, hairdressers, cleaners, is maybe swing by and get a gift certificate you can use once on yourself or with someone else, I would assume, once all this gets better. I mean, I think that's a great way to help small businesses. I really do. I really think that, hey, you know what? Well, I obviously don't get my hair done, but for you or some of the ladies who go out and get their hair done on a regular basis, yeah, I mean, you can't go right now because we don't want you to be so close to someone and run a risk of catching the virus. But at least buy certificates, do something to try to maintain and try to support those local businesses. I mean, they are key right now to making sure that everything else, keeps moving forward. I guess you could say that we don't come to a complete freeze, because I think that's one of the scariest things out there is that they would say, hey, you know what, this is so bad, we're just going to freeze everybody and force us to really stay home. So that's one of the reasons why I keep saying, please, please, please stay home. Don't go out unless you really, really have to. Other than that, just let's let this go by. 2 weeks of being quarantined will prevent a big, big loss. I mean, I hope you're doing the same. I hope you're not going out much unless you really have to.
No, I'm here in my office. I'm actually like it. I like it here because it's nice and quiet. No one's here. And speaking of haircuts, as you can see, I'm a little overdue, but I decided to let my hair grow. I'm gonna let it grow throughout the whole thing, and once I can go back to my barber shop, I'm gonna actually get back to cutting my hair. So we'll see how long it'll grow before I need to go back. But I agree with you guys. I think we should be supporting our local businesses. There's a lot of businesses that I frequent and I think about them, because I want them to be there when this is all over. They either provide me great food that I like to eat or great service, and we want them to be there. So let's think about them in our community. We all live in different communities. So I'm totally
Absolutely.
with that type of thinking.
That's hilarious, Angel. Okay, so we got we got Angel here saying drive-bys have evolved. Yes, they have evolved. But I also do like this next question that Angel also had here, and that was, do we know how the credit bureaus are going to address the forbearance and stop reporting mortgage lates? And I guess that also goes with credit card lates. I mean, how are lenders and everybody going to see this?
I know that's a concern that I have. I'm not really sure. Again, we haven't even started with one first month of payments. So we're all going to learn together, I think, on this. But my concern is that, for example, if they don't report something bad, let's say like a late or anything like that, but they have on there that your loan was in forbearance, I don't know what impact that's going to have when you do try to get a loan in 3 or 4 months. That might cause a waiting period to get a loan. I'm not really sure. So that's why I encourage everyone, if you can make your payment, go ahead and make your payment, because there's a lot of uncertainty right now with how the credit bureaus are going to handle some of this stuff and how it's going to look, and then how the actual lender or the underwriters are going to interpret this. So you want to safeguard your credit as much as possible. Don't take chances, because again, this is all unfolding before our eyes. We're going to try to update everybody as much as possible and try to get as much real information out there. I think that's critical at this time. So I know I think I was sharing with you earlier that I got an email yesterday from one of our credit vendors that the IRS is holding off on verifying tax transcripts. So I'm thinking, oh my God, well, if they're not verifying tax transcripts, how's that going to affect lending? What are the lenders now going to require? So again, that goes back to that domino effect I was telling you, that one thing's happening that triggers another thing, and it goes on and on,
Yeah, absolutely. Absolutely. Man, so once all this is over, Pablo, let me ask you this last question before we finish up here. What's the first thing you want to do once this is all over?
To be quite honest, I was driving home the other day, and seeing people in the parks, seeing people like, I drive by these homes and I never see anyone in their front yard, anyone hanging out, and seeing families hanging out and enjoying this time. I'm actually enjoying this time, to be quite honest. It's a time to slow down. I've slowed down. I realized how fast paced I've been working, how nonstop. Now I have, I'm working hard still, don't get me wrong, but now I don't have this cloud over my head that says, you got to keep going. People are watching, now I can say like, well, the coronavirus thing, and I could take a little bit of a chill pill, right? But I think right maybe right now it's the time. Let's enjoy this time out. You know, enjoy time with your family, with your kids. Get to know them better. Do crafts with them. Do arts. Learn a language. Get people that want to get realtors that want to start doing loans. You're one step away. Just you can go an online course with First Tuesday and get your NMLS endorsement. Talk to us. We can get you set up to start doing loans right away. Everything's technology driven, and there's going to be a lot. There's going to be a large refinance boom that's going to happen. I think here's a prediction I'm going to put out there. I think rates, and I don't know when it's going to happen, but I think maybe by June or July, August, around there, we're going to see rates in the twos, like 2.5% around there. There's going to be a big refinance boom that's going to happen during that time. That's my prediction.
Wow, so that's a great prediction. And I really hope that one comes true. Pablo, I want to thank you once again for being here today. It's been great information. I look forward to more updates from you. Hopefully we can get you back out here another day, maybe next week or the week after, with some other new stuff and updates, or anytime you want. Just, let me know, get in touch with me, and we will definitely be in touch again. And I want to thank everybody else out there who was here today, who has been supporting. Let's just all stay together, keep in touch, and stay safe, my friends. Everybody, stay home. Don't be coming out. Don't do anything. Stay safe, my friends. I'll see you guys next time. Thank you. Oh, bye.